For a look at the IPO landscape, quarterly results, so much more about the markets and everything else. I want to welcome Nasdaq CEO and Chair Adena Friedman. Just had to walk downstairs, basically.
Yeah, I did. It's an easy commute.
It's an easy commute. Okay, so let's talk about these numbers, but let's also talk about just the sentiment, because we've been on sort of a upward trajectory across most of these numbers. Your numbers have come in better than expected, but a lot of companies coming in better than expected. What's happening?
Yeah, so we're really proud of the fact that we continue to demonstrate the strength of our platform, the fact that we're able to perform the way we have in a very dynamic environment. We had 4% top-line revenue growth, 6% growth in our solutions businesses, and we're seeing our index business, as you mentioned, return to growth after a couple of challenging quarters. And we continue to have really strong growth in our anti-financial crime business. We had 19% growth in that business. So we continue to show great demand for our services, but also I'm really, really proud of the team. They stay focused on providing great service to the clients, and that shows up in the numbers.
What do you make just of this little run that we've had, and also tech, since Nasdaq's considered sort of a big tech exchange?
Well, I think first of all, I think we can all agree that kind of technology is an unstoppable force, and I think that definitely shows up in how technology is being used, the expansion of technology. I've seen new technologies that are coming onto the scene,
right,
and all of that really manifests itself in a growth index like the Nasdaq 100. And that has obviously had a really great recovery so far this year. I think what we're now starting to see is what we call light green shoots starting to show up in the IPO market in terms of investors realizing that it's time to start to put some risk capital back to work, try to show that they can underwrite some new listings. Right. And obviously we have the oddity IPO that today is one of those examples.
Talking about risk or risk capital, you used some recently. And I want to just talk about this because I'm curious what the reaction that you've felt now that you've talked to a lot of shareholders after this Adenza deal. A whole bunch of people thinking this was an expensive transaction.
Well, as I said on the last time I was here, right, I would say that we paid an appropriate price for an exceptional asset. And the reason I say that is, Adenza is growing about 15% a year. They have over a 50% margin. Right. And they have, when you unpack that a little bit more, they have 98% gross retention of their revenues, which means they really keep all of their clients. And then they kind of continue to grow. And we're actually providing a supplement to our investors today to give them more insight into Adenza, to show that they continue to land new clients, they continue right, to upsell their clients. But at the end of the day, this is a long-term conviction decision that we've made to really help our right, banks and brokerage clients, our buy-side clients, solve their biggest operational challenges. And across risk management, right, across regulatory obligations, regulatory reporting, and then we also have anti-fin crime. And all of those things together means that we're able to be a great partner to the financial industry to help them navigate the complexities that they're experiencing.
Do you feel like things have shifted, though, with your investors in terms of their view of this? I mean, early on, there really was a view that it was expensive. I talked to an analyst 2 weeks ago who said, actually, you know what, the truth is, if you want to buy a good asset, it's going to cost you some money. In fact, they said Adena should lean into that idea. If a good asset costs money.
Yeah, I mean, it does. In fact, I think you have to recognize that great companies are going to get a premium valuation in any environment. I think that's an important thing to recognize. And when a company like Nasdaq, when we make that kind of decision, we're making that decision for a long-term benefit to our clients and our shareholders. Because at the end of the day, they have structural tailwinds that are really underpinning the growth of their business, whether it's new regulations that are coming out. We just saw what the Fed announced last week. Obviously, in Europe, we've got Basel III end state and other new regulations. You've got the complexities and the correlations of the capital markets around the world, and they help them kind of, what I would say, simplify a complex environment. That is exactly what companies are looking for with technology and with intelligence. Our anti-fin crime business, as they said, is growing really nicely. And it's because they use AI, they use really advanced algorithms, they bring data together, and they root out criminals. And that, to me, is like one of the most important things we can do in the financial system right now.
Adena, yesterday, James Gorman from Morgan Stanley said that he thinks the mergers and acquisition environment is starting to bottom out. He thinks trading is starting to bottom out and that there is some upside potential. It's either going to be the second half of this year or maybe the beginning part of next year is what he's thinking. What do you think, just from what you're hearing, what you're seeing from CEOs?
Yeah, what I've been hearing is certainly that people are starting to realize that the interest rate environment we're operating in is one that we have to start to get used to. Yeah. So when you start to get used to that and you think about that, that means you can understand your cost of capital, and therefore then you can underwrite risk or underwrite new opportunities with that cost of capital. And then investors also, I think, have realized that they've been on the sidelines for quite some time. They haven't had conviction. It's time for them to start to put their capital back to work. And that means IPOs also should start to kind of come out. And what our view on that, though, is that we'll see, we call them light green shoots, like some really interesting and exciting companies coming this fall, but probably much more activity going into the first and second quarter of next year.
And what's the distinction between those coming this fall and those coming next year? They need the capital now? Is it a rush for that?
I think it's actually the really strong companies that have high profitability, high growth, a really great story are going to be able to come out, and that they're going to be able to demonstrate that investors have really good demand for them. And when that happens, then you start to see more companies saying, you know what, I think it's really an exciting time to come out. Let's make sure that we work on it. But we've been talking with, we have about 150 companies in the pipeline to go public. When we've been talking to them, there are a few that are ready to go out in the fall. There are a lot of them that are looking for the first half of next year.
What do you make of just the concentration, though, of this market in terms of the success that we've seen has really come from what we're now calling the Big Seven?
Yeah, and as you saw, we are making an index change related to those companies to make sure their index is properly diversified. But I also think we're starting to see, because you're right, when the growth started coming in, it was really concentrated. You're actually starting to see that dissipate, like meaning more of the performance is coming into more of the companies as investors are realizing it's time for them to underwrite risk.
What's the change you're making in the index? I missed it.
So we're actually going to be doing a reweighting of the index in the next week or so to
Nasdaq 100.
Yeah, so it's basically a rules-based index, and the rule is that 5% of the market cap of the index can't represent more than 50% of the AUM, or 5% of the components can't represent more than 50% of the AUM. And so that rule means that we cap certain companies. We've done it a couple times before. So.